While everyone's obsessing over Bitcoin's next move, there's a Layer 1 blockchain that just smashed through $73 billion in annual trading volume, and honestly, barely anyone's talking about it. SEI Network isn't just breaking records, it's positioning itself as the backbone for the next wave of DeFi innovation. The charts are screaming one thing, but the fundamentals are telling a completely different story. Stick around because what I'm about to show you could change how you think about alternative Layer 1 investments forever. August 2025 just became SEI's highest monthly trading volume on record. We're talking about $1.2 billion flowing through SEI's decentralized exchanges in a single month. To put that in perspective, that's the second highest DEX volume in over 2 years for this network. But the monthly numbers are just the appetizer. SEI has crossed $73 billion in total trading volume over the past 365 days. That's not speculative retail FOMO. That's serious institutional money recognizing something the market hasn't fully priced in yet. The momentum indicators are absolutely screaming right now. Elevated volume, sustained buying pressure, and institutional infrastructure being built in the background. When you see these three elements converging, you're usually looking at the early stages of a major breakout. Now let me walk you through what the charts are really telling us, because this is where things get fascinating. On the short-term 1-hour time frame, SEI took a brutal hit down to $0.2820. Classic sell-off behavior, panic selling, stop losses triggered, retail investors getting shaken out. But watch what happened next. The rebound was immediate and sustained. We're now holding steady around $0.29, and the volume profile during this recovery tells us everything we need to know. This wasn't a dead cat bounce, this was accumulation. The critical resistance zone sits between 29.2 cents and 29.4 cents. Break through that level with conviction, and we're looking at a potential run toward 30 cents and beyond in the short term. But the real story is happening on the daily chart, and this is where technical analysis gets genuinely exciting. SEI is carving out what's called a Bearish Butterfly harmonic pattern. I know the name sounds ominous, but stay with me. This pattern often produces the exact opposite of what you'd expect. The structure started at point X around 39.01 cents. From there, we saw the classic ABCD formation play out perfectly. The retracement to point A, the bounce to B, and then the correction down to C at 27.77 cents. Since that low, SEI has been climbing steadily, now trading around 29.89 cents. The beautiful thing about harmonic patterns is their predictive power. When they complete properly, they often generate explosive moves in the opposite direction of the overall pattern name. Technical analysis tells us when, but fundamentals tell us why. And SEI's fundamental story is absolutely compelling right now. First, institutional adoption is accelerating rapidly. The Japan Financial Services Agency just approved OKCoin Japan's integration with SEI Network. This isn't just another partnership announcement. This opens SEI to one of the most regulated and sophisticated crypto markets in the world. Japanese institutional money doesn't mess around. When they enter a market, they really do their homework. The fact that Japan's regulators are recognizing SEI as a leading EVM network should be sending signals to every serious crypto investor. But, the real game changer is what's happening with stablecoin infrastructure. Circle's cross-chain transfer protocol version 2 just went live on SEI. We're talking about $47 billion in lifetime USDC transfer volume now flowing through SEI's rails. Think about what this means for a moment. Stablecoins represent the future of digital money. Instant, borderless, and honestly unstoppable. But they need the right infrastructure to scale. SEI is positioning itself as that infrastructure. When institutional money starts moving stablecoins at scale, they need networks that can handle massive throughput without breaking. SEI was built specifically for this use case: speed, scale, and real settlement. Major protocols like Yay Finance, Stargate Finance, and Portal Bridge are already integrating with SEI's CCTP V2. This isn't speculative development, this is live functional infrastructure being used right now. So where does this all lead us? The technical setup combined with the fundamental catalysts creates a compelling risk-reward scenario. SEI is currently trading near its 50-day moving average at about 32 cents. Reclaiming this level isn't just a technical milestone, it would actually flip a key resistance level into support and, potentially trigger some accelerated upside momentum. The bearish butterfly pattern gives us some specific price targets to watch. The potential reversal zone sits between roughly 42 cents and 47 cents. These levels represent the 1.272 and 1.618 Fibonacci extensions, and they often act like magnets for price action when harmonic patterns complete. If SEI can break above the 50-day moving average and keep that momentum going, we're looking at potential upside of 42% to 57% from current levels. And honestly, those aren't moonshot predictions. They're mathematically derived targets based on proven technical patterns. But let's talk risk management because honestly, no setup is guaranteed. The key support level to watch is that C point at $0.2770. If SEI breaks below this level and fails to reclaim it quickly, the entire harmonic pattern gets invalidated. In that scenario, we'd be looking at further downside pressure and potentially a retest of lower support levels. The volume profile will be critical to watch. As long as we're seeing elevated trading volume supporting price movements, the probability of successful pattern completion remains high. But if volume starts to decline significantly, that would be an early warning signal to reassess the setup. SEI Network represents something bigger than just another Layer 1 blockchain. It's positioning itself as the infrastructure layer for the next generation of decentralized finance. The $73 billion in annual trading volume, the Japanese regulatory approval, and the stablecoin infrastructure integration. These aren't coincidences. The technical setup suggests we could be at the beginning of a significant price movement. The fundamental development suggests that movement could be sustained by real utility and adoption. As always, this isn't financial advice, but it is a setup worth watching closely. The confluence of technical and fundamental factors doesn't happen often in crypto, and when it does, it usually pays to pay attention. Keep SEI on your watch list, monitor those key levels I mentioned, and remember, in crypto, the biggest opportunities often come from the projects building real infrastructure while everyone else is, chasing the latest trend. Disclaimer: this content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential loss of principal. Always conduct your own research and consider your financial situation before making investment decisions. Past performance does not guarantee future results. The author may hold positions in mentioned cryptocurrencies.